Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are taking a look at both the short-term and the high time frame price action moving into the upcoming weekly close and new week of price action. We are going to be going over both the bullish and bearish case scenarios, giving you exact price targets, invalidations and confirmations of the next projected moves. Before we get into it, smash the like button, hit the comment button and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. You can do that by clicking the pinned comment in the free channel, contacting the admin, viewing our 50+ month trading track record, or find all membership information details by clicking both these links. We do have a sale on at the moment that will end in just over 24 hours. You can find out more information by clicking that pinned comment. Let's go ahead, guys, and jump into the video. So as we can see, Bitcoin has its weekly candle close occurring in just 6 minutes time, and by all accounts, this weekly candle was a bearish weekly candle, not only rejecting from the major level of resistance here at 89,000 to 87.5 thousand, but of course resulting in what we see to be a bearish engulfing candle. In just 5 minutes time, we can see the candle is likely going to be closing underneath the opening price of the prior weekly, suggestive of not only an aggressive week of selling pressure, but a bearish engulfing close, which increases the likelihood for a directional continuation toward the downside. We are going to be discussing the weekly charts, the daily charts, and very importantly, the short-term price action. As Bitcoin is now retraced back into that low $80,000 region, we are going to be going over the next potential short-term moves and triggers for what to expect. Let's start on the market data. 24-hour volume and liquidation have dropped a fair bit over here, with volume dropping down around 12% at 151 billion, liquidations dropping 43% at 192 million. Of the 192 million in liquidations, 138 million still coming from long positions and 54 million coming from shorts. Moving over to the DXY. The DXY not showing too much signs of change over here. Still watching that weekly chart. Let's go ahead and bring that weekly chart up. We can still see we are moving between that 50 EMA and that 200 moving average, sitting around the mid-level of this broader consolidation, this larger, higher time frame horizontal channel. Of course, we did have deviation toward the top side, so we are eventually expecting deviation toward the range low, but this could take numerous months to play out. So for now, we are watching the consolidation and we are watching to see how the price action reacts at the 50 EMA and that 200 moving average, as well as the upcoming economic news and interest rate expectations. Moving over to the S&P 500, we can see here on the S&P 500, the S&P 500 is showing us a lot of weakness. Again, this weakness is really starting to push through here on the weekly, with the weekly candle closing again underneath that 50 EMA, not showing too much strength, particularly with that prior weekly close actually rejecting from that critical level of support at 85.5 to 80, or should I say 5,850 to 5,800, sorry. We have seen that rejection over here, resulting in not only a strong move back toward the downside under the 50 moving average, but of course also resulting in a move underneath the opening price of that prior green candle. So there is no doubt in my mind we are seeing aggressive weakness here on the S&P, and of course I am still watching a move lower. For now, we are targeting around about this 5,300 level, potentially the 200 moving average depending how the price action reacts, but for now that is going to be the expectation. For the S&P to turn bullish here, we are watching a break and close above 5,850. If we can get back above this level, that is when the S&P 500 will turn bullish again, and we'll be watching for continuations upwards. Until that happens, the expected move is downward. That is it for the broader markets, guys. Let's go ahead and jump into Bitcoin. As we mentioned, we have a heap to be discussing from the short term to the macro charts today. So before we get into all of this analysis, make sure to sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll also support yourself in your trading journey by accessing a trusted exchange that I trade on. But of course, you'll support me making this content on a daily basis for you as well. So check out the links, we'll play an ad, and we'll jump straight back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. And we are starting on the short-term price action. So over the course of the last couple of days, we have seen a few things. Notably, we have seen consolidation and an eventual breakdown of a 2-week-long uptrend represented by this diagonal uptrend, as well as the breakdown on the 2-week-long corresponding RSI uptrend, signifying not only a momentum shift downward, but the price action was unable to sustain the trajectory of movement we saw since mid-March. This move toward the downside resulted in not only a rejection from that major daily range at 89,000, which we can show you here on the daily chart, but of course, the macro downtrending diagonal resistance, which has spanned back since the beginning of January. With this move toward the downside, we have seen Bitcoin retest now twice a critical level of support, sitting at that $80,000 to $81,500 region. This being the first of two prior lower high retests, one over here, or should I say higher low retests, one over here and one over here. We've actually come down and retested this now twice. With this move toward the downside, we have seen, of course, a lot of downward price action, resulting in a heap of long liquidations. As we have said many times, as we approach resistance, when you are approaching resistance, that is not the time to be aping into late positions. You want to be waiting for confirmation and for breakouts. So we'll come to that in a second, but let's start on the short term. So a lot of people are probably wondering, Whale, where is Bitcoin going to go this week? What are the probabilities? Are we going to drop lower? Is the crash going to become more aggressive? Or can the buyers get back in control, and can they save this chart? This right here on the short term is going to answer all of those questions, because the key trigger points for macro upward continuations and daily/weekly confirmations of reversals, as well as triggers for extended corrections downwards, lay in this chart here. The short-term chart actually says it all. What we are watching are two levels. Level number one is going to be our $80,000 low. This is acting as a bearish trigger, or what we would consider a level of support where, if lost, the probabilities will lay significantly in an aggressive continuation downwards, which will have macro consequences. Number two, we are watching the $89,000 resistance level. This, of course, being the resistance not only here on the short term, acting as our prior retest and local high, but of course, moving back to that daily chart, the $89,000 level acts as the utmost level of resistance within this resistance zone, which was once support for around 2.5 months, through the months of November into mid-February. So a very, very key point, if we are able to break through this region, it is highly likely we are going to get the confirmation we need for higher time frame reversals, and if we break below 80k, it is highly likely we are going to see aggressive corrections into at least that $76,000 low again, potentially mid to low 70,000. So let's talk about what needs to happen between here now and what consequence we would expect upon the initial breakdown of these regions, and then relate that to the macro charts. So let's start with the short-term price action and talking about the price action between these two levels of support and resistance. What we can see is Bitcoin has corrected a considerable amount. We are now approaching / have approached a key level of support, and what we can see here on the RSI is a very clear downtrend. So there is here a potential for short-term bounces, but these short-term bounces mean very, very little while the high time frame horizontal resistances remain intact. So the overall narrative we are pushing, or should I say the overall assumption should be, we are trading based off an invalidation method. The overall trajectory of the price action is downward. And therefore, the assumption should be the price action will continue downward into high time frame support until proven that horizontal levels of resistance have been taken out. So until we see considerable strength, it is unlikely to, I guess, assume that any short-term rally will sustain beyond the points of key horizontal resistance until broken. That means no matter what happens between this $81,000 to $80,000 low and our 89k high, unless we break above 89k, the probabilities will not change until that level is broken for directional continuations upwards. To put another way, only upon the break of 89,000 do we see a significant shift in probabilities in favor of directional continuations upwards. Not at 84, not at 86, not at 87, only 89. So we need to break above 89,000 to have a greater probability for a directional continuation toward the upside on the macro. Now, when we are taking a look at short-term movements, of course, there is a chance we see rallies into the POC at 84 or even up into its prior change of character at 86. For us to see those moves, we need to see momentum flip positive on the 4-hour chart. You can see the downtrend here on the RSI, 1 rejection here, 2 rejections, 3 rejections, now we are coming back to retest it. So there is a chance we see a short-term rally into 84, maybe into 86 before we continue back down. That is also a possibility, but we do have to remember this is support and this is now resistance. Any sort of movements between these ranges, range high and range low, should be considered natural and perfectly normal fluctuations in the market price. It is only upon the break or the loss of critical structural levels do we see directional continuations in the price action. That does mean on the immediate short term, we are taking a neutral stance. Only upon the breakdown of 80,000 would we then expect an immediate and aggressive correction to resume. So let's take a look at that scenario now. If we were to lose $80,000, we enter this low historical resistance range according to the VRPV. Looking at historical price action, we don't have much price action here, but the price action we do have was relatively volatile, and therefore we would expect an equal reaction. We've seen prior volatility, we would expect future volatility, and of course if we are breaking below 80,000, we would have that breakdown with negative momentum into a low historical resistance range. We'd expect bearish volatility to increase, and thus we would see a large flash correction in the price action, similar to moves we have seen over here in the past. So we are watching very closely for a loss of 80,000 for those moves to develop. Let's now talk about how this all relates to the higher time frame chart. So first and foremost, as we mentioned already, for Bitcoin to be bullish, we need to break above 89,000. That holds very true. What we can see now is that we do have this weekly downtrend. We can see that level right over here. Now, the issue we have here is the price action is deviating, well not deviating, but is traveling along this downtrend. As time goes along, the distance between this downtrend and the horizontal resistance at 89,000 begins to increase. This means we run into another issue. And the issue is, when we're looking at confirmations for strength, structure, and trend, okay, strength being momentum, we're watching the weekly momentum, the downtrend here to break. When we're watching something like our trend, we are watching the downtrend here, and we're watching structure, we are watching the horizontal level. When we are watching for something like this, what it does mean is, even if we were to break out of this trend, the resistance remains intact, and this is the trigger point, but so horizontal levels are more important. These act as trigger points for directional continuation. So hypothetically, if we were to break through the trend all the way down here, the breakout target for that may only be 89,000, as opposed to if we were to have broken out over here, we would have been breaking out consequentially of both of those levels, which would give a higher breakout target. So we do run the risk of a weaker reversal if the breakout occurs at a far later date than what we would previously see if we were to have broken closer to the horizontal level of resistance. So that is, of course, a negative. But when we are looking at confirmation, we need to look at confirmation the same way nevertheless. We are watching a game for a break of 89,000 in conjunction with a break of our weekly downtrend on the RSI to signify a positive momentum shift, which would likely increase the probabilities of a continuation upwards. However, that scenario is not the most likely scenario. While the RSI remains negative, and while the price action remains underneath the weekly downtrend and the horizontal level of resistance, just as we mentioned in the short term, it doesn't matter if the price bounces to 84, 86, the probabilities are in favor of directional continuations downward, as that is the overall trajectory of the current trend, and only upon the break of prior historical levels of resistance will we see actual probability shifts in the direction. So until then, the expectations are lower. So when we're taking a look at these lower expectations, how can we give targets and how can we project volatility? So to do that, we are watching for number one, prior levels of liquidity, okay, changes of character, sell-side liquidity retests, all these things we're watching. So we're watching things like over here, 72,000, okay, prior change of characters. We are watching the sell-side liquidity retest, 52 to 55,000, of course. We are watching things like the 200 moving average over here. But of course, we are watching as well triggers for these moves. The triggers for these moves include the 44.62 on the RSI, the weekly RSI. Again, we have talked about this a lot of times on this channel, and we'll continue to talk about it as it remains very, very relevant. To put the analysis in, I guess, a very simplified nutshell, momentum is leading for price action, and in this instance, the directional continuation of the RSI will highly sway the probabilities for either directional moves up or down. And as we can see, if we zoom into this RSI, we apex, okay, meaning the RSI comes to an apex around the 21st of April, so around 20 days. Now, when we're looking at apexes, generally the price action will not move into the apex to make a decision. We break out in the later part of when we approach that apex point. So I'm expecting this week to see the RSI attempt to either break below the 44.62 or break above the downtrend. I believe that in this weekly candle, we will see an attempt at either or. Now, we do need to keep in mind for the RSI to confirm a breakdown or a breakup, it needs to have a weekly close. So in 7 days' time, we'll have a weekly close because it moves and it's based off the closing price of the candle, okay? So when we are looking at the 44.62, the reason it's so important is because the 44.62 is a level we've been above since the start of the bull market. This has been the bull market. Some people saying we're not in a bull market, we haven't been in a bull market. That is objectively just factually incorrect. Bitcoin went from 16.5 to 110,000. That is literally the most aggressive bull market we've seen for a while for Bitcoin alone. Altcoins got wrecked, absolutely, but Bitcoin saw a fantastic bull market in terms of the sheer amount of money that flew into Bitcoin this cycle in comparison to prior cycles was absolutely astounding. Now we're looking at percentage gain. Of course, we have diminishing returns. Percentage is going to decrease, but when we're looking at the total amount of money that has flown, the total inflow of money into cryptocurrency, it has been something of, a massive proportion in comparison to prior cycles. So we had a fantastic rally for Bitcoin, a fantastic bull market. The question is, will that sustain? Again, if we lose that 50 EMA, we are losing the 44.62, we are losing that bull market support. We run the risk of entering a higher time frame downtrend into the 200 or the 55 level. I will also show you the Gaussian channel indicator. if we are looking at prior bear markets, right? The prior bear markets historically essentially started when we saw two things. Number one, bearish divergences, okay? On the weekly, we can see bearish divergences over here, okay? And after the bearish divergences, we see breaks into the upper band of the Gaussian channel. So if we were to break into the upper band of the Gaussian channel, that could be I guess an indication that we are entering a steeper and more aggressive downtrend, which could take us into that 200 moving average, potentially into about 55,000 sell-side liquidity. So that is worst case scenario for Bitcoin. For any of that to even be possible, we need to lose 80,000. So it comes back to this short-term chart. As we mentioned, the short-term chart is going to tell all. If we see the price action rally back up and break 89,000, well, guess what? Bitcoin has saved itself. We avoid this potential catastrophe. We eventually, and most probably will see, a breakout of the weekly RSI, and we will follow a similar pattern to what we have seen in the past. These downtrends break, and we'll see strong continuations upward. However, if we fail to see that, and at the moment the probabilities are in favor of us failing to see that, an $80,000 lot is lost, well, then we run the risk of that steeper correction. So all in all, guys, the weekly candle close has occurred. It was bearish. It was not a good weekly candle close. The S&P 500 is not looking fantastic. The daily charts are not looking great. The short-term charts are also not looking great. However, the short-term charts are now approaching, I guess, the final leg of support, which has the potential to flip the chart. So remember, if we lose 88,000 or 80,000, this entire level turns into resistance. Then we don't only have one resistance to break, but we have two, okay? Increases the probability of directional downward continuation even further. So this week is going to be a week of patience. I think a lot of people are going to try get into positions early. I think a lot of people are going to try ape in. We saw, the last few weeks, people getting ridiculously bullish over here. Calling for altcoin season again, calling for Bitcoin to fly to the moon. There have been some people posting bull charts every single day ever since. But we have to remain objective to the trend, right? When the trend is negative, you have to trade with that trend. You have to wait for that trend to flip. And until it flips, well, then the probabilities are against you. And you have to be aware that sometimes it is okay to trade when the probabilities are against you, but your chance of success is always going to be lower, and therefore you should manage your risk adequately if you know you're taking a position that may not be favorable, or at least a position of higher risk. So thanks for tuning in, guys. Have a fantastic day. I'll catch you guys in tomorrow's video. Excuse me a little bit today. I am quite sick, so I don't know if you can tell in my voice, but it has been quite hard to speak for 20 minutes today, but I've had a great time. I always enjoy doing these videos and sharing my analysis with you guys. So have a great day, and I'll catch you tomorrow. Cheers.